London has the Rothschilds. Paris has the Banque de France. Early America? It had a president with a dueling scar on his face and a very personal grudge against bankers. In 1833, Andrew Jackson walked into the White House determined to destroy the most powerful financial institution in the United States, the second bank. Not regulate it, not reform it, destroy it. And the terrifying part is, he won. But the cost of that victory wasn't measured in votes or headlines. It was measured in bank failures, shattered businesses, a 5-year depression, and an 80-year power vacuum in American finance. A vacuum so destructive that future presidents and even private bankers would beg for a new central bank to stop the bleeding. This is the story of the war that shaped America's entire financial future. A war fought not on battlefields, but in veto messages, credit contractions, cabinet firings, and backroom political assassinations. And it all started with a man who believed the entire banking system was out to get him, and who decided to strike first. If this feels like ancient history, it shouldn't. The distrust Jackson ignited still burns through today's financial debates. Every time someone says the Federal Reserve has too much power, every time a politician rails against elites controlling the money, every time Bitcoin advocates talk about taking currency out of the hands of central bankers, every time someone shouts, "End the Fed," they're reenacting Jackson's war, just with better microphones. Andrew Jackson didn't invent anti-establishment politics, but he was the first American president to weaponize it against the entire financial system. And he didn't just talk. He acted. He rewrote the relationship between American democracy and American money, not through careful policy, but through political force. And we're still living in the world that followed. Before we get to the explosions, you need to understand both sides of the fight. The bank Jackson wanted to kill, and the man doing the killing. The Second Bank of the United States was chartered in 1816, after the chaos of the War of 1812. It wasn't the government. It was a private corporation with a federal mandate. It held federal deposits. It issued relatively stable banknotes. It forced state banks to back their paper with real gold and silver. It pulled in excess notes when inflation picked up. It acted as the central clearinghouse for payments and credit. In a country where hundreds of tiny banks were printing their own notes like local coupons, the Second Bank was the one institution that kept the system stitched together. By the 1820s, trade was expanding, credit was flowing, and the economy was more stable than it had been in years. The bank was doing its job. Its president, Nicholas Biddle, was sharp, polished, and very aware of his own influence. He believed the bank existed to protect the nation from reckless politicians. Andrew Jackson believed the bank existed to protect elites from the people. That difference in worldview was gasoline waiting for a match. Jackson's hatred of the bank wasn't abstract. It was personal, political, and rooted in power. First, the personal. Jackson grew up on the frontier. He saw how bad paper money and failed credit destroyed ordinary people. In the 1790s, he was nearly wiped out in a land deal when the buyer's notes turned worthless. To him, paper money was a lie. Banks were the tools the rich used to make that lie profitable. Second, class and culture. Biddle was everything Jackson despised: Philadelphia aristocracy, elegant suits, refined salons, intellectual circles. Jackson was a scarred war hero who'd fought duels and survived assassination attempts. Biddle represented Eastern finance. Jackson represented Western resentment. And third, power. Jackson believed the bank had too much sway over Congress, over states, over the entire economy. It was unelected. It was national. And it was rich. As he put it later in his veto message, the rich and powerful too often bend the acts of government to their selfish purposes. He wasn't wrong about the danger of concentrated power. He was catastrophically wrong about what would happen without it. The war truly began in 1832. Biddle knew the bank's charter expired in 1836. If Jackson won another term, the bank was dead. So Biddle forced the issue early. He pushed Congress to recharter the bank 4 years ahead of schedule. A political ambush. Jackson vetoed it instantly. This wasn't a dry, technical veto. It was a populist manifesto. 10,000 words accusing the bank of being an unelected aristocracy. In November, the voters chose. Jackson won in a landslide. To him, that wasn't just a victory, it was a mandate. The bank must die. There was just one problem. The bank was still legal until 1836. Jackson didn't care. In 1833, he ordered the government to remove all federal deposits from the bank and place them into a network of state-chartered pet banks. His first Treasury Secretary refused. Jackson replaced him. The next Treasury Secretary refused. Jackson fired him on the spot. He finally installed Roger Taney, a loyalist who did exactly what Jackson wanted. Within weeks, millions of federal dollars were drained from the second bank and scattered across smaller institutions. The Senate was furious. In 1834, they formally censured Jackson, the first and only time a president has ever received that rebuke. Jackson waited until he controlled the Senate again, and had the censure expunged from the record. He wasn't just fighting the bank, he was proving he'd break any norm required to win. But Biddle wasn't finished. He still controlled the one weapon that could hurt Jackson: credit. As federal deposits dried up, state banks, especially Jackson's pet banks, began lending aggressively. Speculation surged. Land prices exploded. Biddle believed the only way to prove the bank's importance was to let the country feel the pain of not having it. So he tightened credit. He called in loans. He refused to renew them. His goal was simple: create a crisis so severe that Congress would be forced to recharter the bank. One senator even wrote to Biddle privately, "If you will only continue the pressure a little longer, we shall have the recharter." It was economic warfare, and it worked, briefly. Credit dried up, businesses failed, merchants flooded Congress with petitions. But then Biddle overplayed it. The public saw that the nation's most powerful banker was deliberately causing suffering to protect his institution. Jackson's monster metaphor didn't feel like rhetoric anymore. It felt like a diagnosis. By early 1834, Biddle backed off. Politically, the war was over. The bank's charter expired quietly in 1836. It tried to survive under a Pennsylvania charter. It collapsed within a few years. Jackson had killed his monster. But the cost of that victory was about to show up, and the bill would be paid by everyone. Without the second bank, there was no central authority left to restrain the smaller banks. They issued their own notes, backed by thin reserves. So-called wildcat banks popped up everywhere. America's monetary system became a patchwork: notes that traded at face value in one state, sold at a discount in another, and were rejected entirely a few hundred miles away. Meanwhile, Jackson's pet banks, flush with federal deposits, shoveled out credit. Land speculation exploded. People borrowed heavily, using paper money they assumed they could always convert into gold. It was a bubble. Jackson saw it and tried to stop it. In 1836, he issued the Specie Circular. Federal land could no longer be bought with paper notes. You had to pay in gold or silver. He thought this would gently cool the bubble. Instead, it detonated it. Everyone rushed to exchange paper for gold. But banks didn't have enough gold to cover their promises. They began failing. Credit vanished. Businesses collapsed. On May 10, 1837, barely 2 months after Jackson left office, New York banks suspended specie payments. They simply stopped giving people gold for their notes. It was a full-blown financial panic. The Panic of 1837 triggered a depression that lasted 5 brutal years. Cotton prices collapsed. Wheat prices collapsed. Hundreds of banks failed. Tens of thousands of people lost their farms, their businesses, and their savings. And the hardest hit were the frontier farmers and working-class Americans Jackson claimed to be protecting. Jackson killed his monster, but he'd broken the only thing holding the system together, and the consequences lasted 80 years. After the bank died, America went without a central stabilizing institution until 1913. In that time, the Panic of 1837, the Panic of 1857, the Panic of 1873, the Panic of 1893, the Panic of 1907, it was crisis after crisis after crisis. During the Civil War, Lincoln had to create greenbacks, fiat currency with no gold backing, because the country had no central bank to coordinate financing. Inflation surged. Confidence wobbled. In 1907, the system broke so badly that one man, J.P. Morgan, personally organized a bailout from his library to save the U.S. financial system. America didn't have a central bank. It had a volunteer. After 1907, even Wall Street agreed this couldn't continue. The country needed a stabilizing force. And in 1913, Congress passed the Federal Reserve Act, creating the very kind of institution Jackson spent his presidency trying to destroy. Different era, different structure, but the same core purpose: stabilize the money supply and prevent panics. Jackson believed he was saving democracy from a financial monster. Instead, he left America with no defenses, and the country paid for it again and again. So here's the question: did Andrew Jackson save the republic from corruption? Or did he blow a hole through the system that took America 80 years to patch? What do you think? Let me know in the comments. This is Money Margins. Thanks for watching, and I'll see you next time.